Welcome back to Explain the Charts, where we break down the news and chart data to help you understand the market. Today, we're analyzing GBPUSD, the British pound against the US dollar, and seeing what kind of trends and signals we can find. Let's start by looking at the news, because understanding the current economic climate is crucial for any trader. Recent reports suggest that the Federal Reserve is preparing to cut interest rates, potentially by 25 basis points at its next meeting in November. This dovish stance from the Fed has already weakened the US dollar, boosting the pound sterling to US dollar pair. However, it's important to remember that the Bank of England is also expected to cut interest rates, likely 4 times by the end of 2024, bringing the key rate down to as low as 4.25%. This diverging monetary policy could make the pound sterling to US dollar more volatile in the coming months. We'll be looking closely at how these events play out on the charts. Let's move to the daily chart first and see what kind of picture it paints. As we can see from the daily chart, GBPUSD has been trending upwards since early September, hitting a multi-year high above 1.3200. This strong move higher can be attributed to a combination of factors, including the Fed's dovish stance, positive UK economic data, and increased demand for the British pound. However, the recent rally has stalled at resistance levels around 1.3400, suggesting a potential for consolidation or even a pullback in the near term. The daily RSI indicator is approaching overbought levels, which could also signal a potential for a correction. While the overall outlook remains bullish, we need to be aware of these bearish signs and watch for potential reversals. Let's zoom in on the 1-hour chart to get a better idea of the short-term dynamics. Here, we can see that GBPUSD has been trading within an ascending regression channel since September 12th. The recent decline below 1.3400 has brought the pair closer to the lower boundary of this channel, but it remains within the channel's range. The 4-hour RSI indicator is currently near 60, indicating a bullish bias in the short term. This suggests that while there's potential for some short-term pullback, the bullish trend could resume. Now let's take a look at the 15-minute chart to see what kind of intraday trends we can find. On this time frame, we can see that GBPUSD has been trading in a relatively tight range over the past few hours. There have been several attempts to break out of this range, but they've been met with resistance or support levels. The 15-minute RSI indicator is currently in neutral territory, suggesting that the market is indecisive in the short term. This suggests that we could see a breakout from this range, but it's too early to tell in which direction. Let's recap what we've learned from our analysis. The pound sterling to US dollar has been on a bullish run, but recent news and market signals suggest that the rally could be nearing its end. The daily chart shows a potential for consolidation or a pullback, while the 1-hour chart suggests a bullish bias in the short term. Key resistance levels to watch are at 1.3400 and 1.3414. Key support levels to watch are at 1.3265, 1.3200, and 1.3142. If the pound sterling to US dollar breaks above 1.3414, it could target the 2019 high at 1.3515 and the 1.36 handle. If the pound sterling to US dollar breaks below 1.3265, it could target the August high day close at 1.3260. The upcoming U.S. economic data releases, particularly the jobs report on Friday, could have a significant impact on the pound sterling to US dollar. A strong jobs report could strengthen the US dollar and lead to a pullback in the pound sterling to US dollar. A weak jobs report could weaken the US dollar and support the pound sterling to US dollar. Overall, the pound sterling to US dollar outlook remains bullish in the long term, but we need to be aware of the potential for short-term pullbacks. Remember to always manage your risk and trade with a plan. Stay tuned for more market updates from Explain the Charts, and happy trading!